you're trying to find stocks that are in their early stages of growth, IPOs are of course a great place to start. With Peloton, Lyft, Uber, Beyond Meat, and many other high-profile IPOs hitting the market this year, there's heightened investor interest in new issues. But amid all the chatter and hype that can come with these high-profile IPOs, it's important to know how to properly handle IPO trades. Investors should be aware that there's added uncertainty that comes with buying IPOs on their first day of trade. That's because IPO stocks tend to be on the volatile side and risky since they don't have a trading track record. To put it bluntly, with IPOs, it can either be feast or famine. From Facebook's debut in 2012 to Snap's in 2017, there are many examples of IPO trades that quickly head south right after the first day. With Facebook's IPO, it took that stock more than a year to get back to the level it was trading at when it first went public. So instead of holding and hoping for an eventual gain, which you could potentially get as a long-term shareholder, investors who are wanting to be more tactical should instead approach their IPO trades by looking for what we call an IPO base. We've found that many top stocks start their first major moves after forming these IPO bases. Now, because not all IPO stocks explode higher right out of the gate, that's exactly why IBD looks at IPO bases to have an edge with our IPO trades. Our research shows that waiting for an IPO stock to break out of an IPO base before buying increases the likelihood of a winning trade. So let's talk about what we mean when we say IPO base, and let's shift our attention to the chart of Beyond Meat to explain. Now, Beyond Meat is a great example of a big IPO winner this year. Now, essentially, an IPO base forms when a new issue consolidates its gains shortly after going public. And these patterns can form in as little as 5 days of trade, which is much shorter than the standard base patterns that IBD looks at, which need at least 5 to 7 weeks to form. Now, after just 4 days of trade, Beyond Meat started to consolidate, forming this IPO base here with a buy point at 85.55. And the stock broke out above that level, clearing prior resistance. And after shaking out some shareholders, Beyond Meat continued to blast higher. And it offered investors multiple buying opportunities here, with another base here, and then we also had a cup with a handle pattern forming here. And now the plant-based meat stock ultimately ran up as much as 858% in less than 3 months. A massive jaw-dropping run here. And it all started with this IPO base. You can see how the stock took a quick breather to digest its gains to form the IPO base. And when shares cleared that prior high and hit new high ground, Beyond Meat was able to prove its strength. When you see action like this, you are putting the odds of success in your favor. And fast forward to today, Beyond Meat is now trading around the 150 price level. Being tactical when you buy also requires being tactical when you sell. And with the last breakout and move here from Beyond Meat, IBD would have sold once the stock fell 7 to 8% below the entry point, and then once it broke below the 50-day moving average in above average volume here. Now, Beyond Meat could be forming a new base now, so we'll just have to wait and see when and where on the chart the next buying opportunity might be. And while the chart action is clearly crucial here, the fundamentals matter as well. Beyond Meat has reported sales growth of well over 200% in its first 2 quarters as a public company, and it's expected to turn a profit sometime in 2020. IBD's research shows that the best IPO stocks have sales growth of at least 30% and sometimes much, much more. And since many new issues are not profitable, seeing the path to profitability with Beyond Meat is positive. So remember, with IPOs, buying on the first day of trade is risky. If you wait to buy after an IPO base forms, you're putting the odds of success in your favor. And for even less risk, investors interested in gaining exposure to new issues can also consider ETFs. Renaissance Capital's IPO ETF and First Trust's FPX ETF are 2 examples of funds that focus on recent IPOs.